Hi. If we take the last 19-month period from April 2020 onwards, the Nifty is up by a whopping 130%. Nobody would have expected such incredible returns in these difficult pandemic times. But that's how the market behaves. Markets always surprise. An interesting thing about the markets is that there are always bulls and bears in the market. Even now, at very high valuations, there are bulls and of course bears in the market. Therefore, there will be always a bullish view and a bearish view. Let us look at these, let us critically examine these two views to get the issue in proper perspective. First, let us look at the bearish view of the markets. The bears regard the present valuations to be excessive. With the Nifty at 18,500, our 1 year forward PE is now around 23. The long-term average is 15. Present market cap to GDP is around 125. The long-term average is around 78, 79. MSCI India is quoting at 90% premium to emerging market peers. If we take other parameters of valuation like price to book, dividend yield, etc., again, all these point to very high valuations. So the bearish view is that at these high valuations, markets are vulnerable to corrections. Some event can cause a big corrections in the market, and the market can go into a bearish phase. The trigger can be a worse than expected inflation, or the American Central Bank tightening interest rates earlier than expected, or some presently unknown factor, a geopolitical factor, a black swan event we don't know. So at high valuations, markets are vulnerable to corrections and the markets can go into a bear phase. Now let us look at the bullish argument. The bulls believe that Indian economy is on the cusp of an expansionary cycle. This year, the Indian economy will be growing at 9.5%. And the bullish view is that we can sustain an average 7% growth for the next 4 to 5 years. And what is the logic behind this optimism? What is the economic logic and market logic behind this optimism? Mainly, there are 5 factors. I will summarize 5 factors. Number 1, India is now the government of India is implementing a pro-investment economic policy. The government has cut the corporate tax rates. It is privatizing in right earnest, as proved by the privatization of Air India. It has implemented the labor reforms, and the central bank is in an accommodative monetary stance, and the rate of interest is very low. Secondly, the private sector is on the verge of a capex cycle, capital expenditure cycle. Of course, there can be skepticism that the capacity utilization in manufacturing is low, and therefore a capex is difficult. But then capacity utilization is improving, and in some areas there is massive investment happening. For example, in renewable energy, one single company is implementing a project to offer 75,000 crores of capital expenditure. There are other expenditures also happening in the renewable space. The low interest rates have become a major tailwind for housing and construction. Therefore, in all construction related segments, capital expenditure is happening. So this capex can lead to a sustained growth for the next 4 to 5 year period. The third factor which the bulls emphasize is the boom in exports. Our export growth during the last several months is higher than what it was during the pre-pandemic period. This year, India is likely to clock an export earnings of $400 billion. This is quite impressive, and international trade is in a favorable setting which can contribute to India's export boom. Fourthly, there is boom in FDI. Last year we received $64 billion of FDI, making India the fifth largest recipient of FDI in the world. Perhaps more important than all this, the startup ecosystem is doing exceedingly well. Unicorns are exploding. We now have more than 60 unicorns, and these unicorns are raising money from abroad, from within India, and investing all this money. So this is also contributing to economic growth. This is expected to contribute to economic growth substantially in the coming years. So this is the bullish view. If this happens, then for the next 5 years, Indian corporate sector will clock an earnings growth of around 20%, more than 20%, justifying the high valuations. This is the bullish view. Now the question is, which of these two views, the bearish and the bullish views, will prevail? Hard to predict, only time can tell. It's possible that both can transpire. Initially, we can have a correction in the market in a short period of a bearish phase because of some reasons which I alluded to earlier. And later, the markets can pick up and the markets can go into a phase of sustained growth. We have to look at this only and prove what is right. We will know which of these two scenarios will play out only in hindsight. So what should investors do? My own request to investors is not to look at Samvat 2078, but to look beyond that. Let us look at Samvat 2087. Why am I talking about Samvat 2087? Samvat 2087 would be the year 2030, more than 8 years from now. And by 2030, Indian economy would be a 7 trillion economy. Our Prime Minister's dream was to make India a 5 trillion economy by 2024, but it's not going to be realized. The pandemic has intervened and we lost almost 2 years. But then a 5 trillion economy is very much realizable by 2027. And by 2030, by the turn of this decade, India would be a 7 trillion economy. And at 7 trillion economy, our corporate earnings would be 20 lakh crores. Last year it was 5.31 lakh crores. In 2030, more than 8 years from now, 9 years from now, it would be 20 lakh crores. That means corporate earnings can multiply around 4 times in the next 9 years by 2030 or Samvat 2087. This means the indices can multiply 4 times from now. Sensex can be around 2,40,000, which may appear very dramatic and very challenging at the present context, but it is possible. The Nifty can be around 72,000 by 2030. These are realizable goals. Of course, it is a bullish view, but this is achievable. Therefore, take a long-term view. Continue to invest in the market systematically. Remain invested. The future is extremely bright.